Good afternoon, everyone. So today's discussion will be on gross income. That would be inclusions and exclusions for the purpose of computing the income taxation under the Philippine law. So on our previous videos, in our previous discussions, we have already discussed how to compute income taxations or income tax due from different taxpayers. Either it is a self-employed or a mixed income earner. So this time, we will going to magnify or zoom in what is gross income. Since in our previous videos, we have already uh, compute how to identify your tax dues. But the gross income provided is already given. So this time, let's specify, enumerate all income subject to tax. Okay, so first let's define what is income under our tax laws. So for tax purposes, income may be defined as the gain derived from capital, from labor, or from both, provided it be understood to include profit or gain through the sale or conversion of an asset. That is under the revenue regulation of the Bureau of Internal Revenue. Okay, so gross income as defined by the tax code. So gross income as derived from whatever source, including but not limited to the following. So the definition provided by the tax laws is very generic. So what the law provides is income not subject to tax. So the law does not specifically identify which income should be included in the computation. Nevertheless, the law just provides for the income which is excluded from the computation. Okay, so for gross income, under the law or the NIRC enumerated the following. Number one, compensation for services in whatever form paid, including but not limited to fees, wages, commissions, and similar items. So this is the income we have already discussed last video. So the compensation income or the income received by the employee under employee-employer relationship. Second, gross income derived from the conduct of trade or business or from the exercise of profession. So the second item provided by the law is called as professional or business income. So it was already introduced on the first two topics discussed under this title. Third, gains derived from dealings in property. So we have already introduced that one on the previous video. So specifically the discussion on capital gains tax. Fourth, we have your interest, and it is considered as a passive income subject to final tax. We have already discussed portion of it on our previous discussion. Rents and royalties, dividends, which are all subject to passive income except for rent. Then number 8, annuities, prizes and winnings, also a passive income. Pensions. So we will talk more about this kind of income on the succeeding slides. And partners distributive share from the net income of a general professional partnership. So we will discuss this in detail on the succeeding slides. Okay, so what are the income or gross income, or what are the income excluded from the computation of income tax? So this is under section 32B of the National Internal Revenue Code. Okay, first, life insurance. The proceeds of life insurance policies paid to the heirs or beneficiaries upon the death of the insured. So obviously, it uh, satisfies the definition of income under the law. But it was excluded in the computation for the account of it is just proceeds from the insured, and it was received by the heirs or beneficiaries of the decedent or the insured individual. whether in a single sum or otherwise. Some the insurance life insurance is in a lump sum basis, some is on an installment basis. So that is irrelevant in terms of the computation, since in the first place life insurance is excluded from the computation. So if ever the taxpayer receive life insurance because of he or she is a beneficiary, so obviously that amount or that proceeds will be excluded from the computation. Okay, under an agreement to pay interest thereon, the interest payment will be included in gross income. So we all know that interest will be subject to final tax. But in the sense, it is subject to income taxation, or subject man sa Japan sa income tax na tinatawag, although it is subjected to final income tax since interest is a passive income. B. Return of premium. So the amount received by the insured as a return of premiums. So in this sense, the insured is not yet, ano, tawag na, not yet, uh, did not die. So the amount he paid as a premium, uli lang. So there are lots of policies available that after years of paying the premium, portion of it will be returned to the insured or to the insured individual. So in that case, if the premium was returned to the insured by the insurance company, so that amount is not included in the computation of gross income. Therefore, it is not subject to income taxes or income taxation. Okay, so return of premiums paid by himself under the life insurance endowment or annuity contract, whether the term or at the maturity of the term mentioned in the contract or upon the surrender of the contract. So that is irrelevant. Whether it is prematured or if the insurer is reach the contract period, it doesn't matter. As long as it is a return of premium, so automatically it will be excluded from the computation of income tax. Letter C, gifts, bequests, and devices. The value of the property acquired by gift or by bequest, device, or descent, or inheritance provided, however, that the income of such property will be included in the gross income. So the question on letter C is that why letter C is not subject to income tax computation, because letter C is already subject to what we call transfer taxes. So either it is on account of gratuitous transfer, either donation or estate, so it is subject to transfer taxes. So if you're going to include the property received by the recipient or by the heirs, it will be considered as double taxation since it is subjected to what we call transfer taxes, either donor's tax or estate tax. And that would be discussed uh, on business and transfer taxes. That would be next semester. Okay? So, the point is you have to consider if the income on that property is already subject to estate tax, so it will no longer subjected to income tax. But under the rule or under the general rule, the income of that property should be included in the computation, not the value of the property received. Okay? So letter D, compensation for injuries or sickness. So I believe you will agree that this is very comprehensible, since it is very inhumane for our tax laws to consider this kind of compensation to be subject to income tax. So compensation for injuries or sickness, of course, the law should exclude this amount, because the amount received through an accident or health insurance or other workmen's compensation acts as compensation for personal injuries. Take note for the term personal injuries or sickness, plus the amount of any damages received, whether suit for agreement on account of such injuries or sickness. So I believe it doesn't need further explanation. Okay, so next, letter E, income exempt under treaty. So we all know that a treaty is a valid source of income tax laws or income tax authority. So we have already discussed that one on chapter 1. Okay, so the introduction to income taxation. So treaty is a valid source of income tax laws, especially if the Philippines is the signatory of that treaty, of course. So income of any kind to the extent required by any treaty obligation binding upon the government of the Philippines. Okay? Letter F, retirement benefits, pensions, gratuities, and etc. So retirement benefits received under Republic Act number 7641 and those received by officials and employees of private firms, whether individual or corporate. First, in accordance with the reasonable private benefit plan maintained by the employer. So there are a separate uh, trust or fund provided by the employer. Okay, so it should be reasonable. Okay, then two, the plan is funded, so there is a payment made by your employer. Then there are funds specifically allotted or restricted for that purpose. Third, the retiring official or employee has been in service of the same employer for at least 10 years. Okay? So, if the retirement benefits provided by your employer was given to the employee on his or her ninth year, so of course, the retirement benefits received by such should be included in the computation of gross income. Therefore, it will be subjected to income taxation. So take note for these requisites. Fourth, the employee is not less than 50 years of age at the time of the retirement. Okay, so it should be 50 years old. If the taxpayer or the recipient is less than 50 years old, then the retirement benefits received by such individual should be included in the computation of gross income and therefore subject to income tax. Number 5, the employee can receive the benefit of exclusion only once. So there are possibilities that after an employee receive a retirement benefit complying the first four requisites provided in this slide, then after which the employee gain unemployment, then on his or her second employment, he will going to receive retirement benefits. In that case, or on the second chance or second time that the employee will receive retirement benefits, it will subjected to income taxation. So it will be included in the computation of gross income, even though the first four requisites is satisfied. Okay? Since these retirement benefits can only be excluded once. Okay? Once. Letter G, separation benefits. Any amount received by an official or employee rather, or by his heirs from the employer as a consequence of separation from service because of death, sickness, and other physical disability or any cause beyond the control. So the point or the important word that we're going to highlight in this example or in this separation benefit is the causes of separation is beyond the control of the individual. Okay, so if the causes is voluntary, like for example resignation, so it will be subjected to income tax. So the separation benefits received by the taxpayer, if the cause of his separation is voluntary, so in that sense or in that case, it will be subject or it will be included in the computation of gross income and therefore subject to income taxation. So take note for the cost, it should be beyond the control. So there's no, so the examples provided, death, sickness, or other physical disabilities are just a few example. So, there are other causes beyond the control of the employee. Like for example, if the employer or the company is being subject to a merger and consolidation, and the employee chooses, or sorry, the employee was not selected to be part of the new company. So in that sense, the separation benefits of that employee will not be subject to income taxation. Okay? Take note. For causes beyond the control, it is not subject to tax. For causes under the control or voluntary reason, so it will be subject to income tax computation. Okay, next. Letter H, retirement benefits from foreign sources. So social benefits, retirement gratuities, pensions, and other similar benefits received by resident or non-resident citizen of the Philippines or aliens who come to reside permanently in the Philippines from foreign government agencies and other institutions, private or public. Okay, so individuals who decide to reside in the Philippines and receive retirement benefits from foreign sources will not be subjected for income tax computation. So these benefits should be excluded from the computation of gross income. Okay. I, benefits from SSS or Social Security System, since SSS is a government institution. So whatever benefits received from SSS will be excluded from the computation of income tax. So benefits from GSIS, so government service insurance system. That's for government employees. Includes retirement gratuity received by government officials and employees from the government service insurance system. So that those benefits should be excluded from the computation of gross income and therefore not subject to income tax. Okay, next. Okay, income from foreign government. So income derived from investments in the Philippines in loans, stocks, bonds, and other domestic securities, or from interest on deposits in banks in the Philippines by the following: by foreign government, by financing institution owned and controlled or enjoying refinancing from foreign governments, and third, international or regional financial institutions established by foreign governments. So those income provided by by a foreign government to an individual in the Philippines, either in the form of investment in loans, stocks, bonds, etc., should be excluded from the computation of gross income and therefore not subject to tax for the same purpose or for the same principle of international comity. Okay? Exclusions from gross income. So we are on letter I, income from public utility and governmental functions. So income derived from any public utility, like for example, water, electricity, etc., or from the exercise of any essential government functions accruing to the government. Please take note for this phrase, accruing to the government. So it will give you an idea that all income received by the government, of course, should not be a subject to tax because the one who is enforcing taxation is the government, and the income and the ano na gani and the entity receiving the income is also the government. So it will give you an idea that it should be not subject to tax since again that the one who enforcing the taxation is the government, and the entity who is receiving this particular income is also the government. So it should not be subject to tax, of course, of the Philippines, government of the Philippines, or any other political subdivision thereof. Okay, letter M, prizes and awards as recognition. So, prize, we have already introduced what is prizes and what is award. So, well, in fact, it is subject to passive income under our previous video. You can review that one. Okay, so what is the income or prices provided as recognition under letter M? So prizes and awards made primarily in recognition of religious, charitable, scientific, educational, artistic, literary, or civic achievement, but not only if the recipient was selected without any action on his part to enter the contest or proceeding. Like for example, you will receive the Ramon Magsaysay Award for Government Service. So you did not take part in the selection process. So the committee selected or chooses that particular awardee to receive the Ramon Magsaysay Award. So there are lots of awards provided under our law. So that would be the example. So if ever that the award or prizes given is on a monetary consideration, so the amount received should not be part of your gross income and therefore it will not be subject to income tax. Okay? Second, the recipient is not required to render substantial future services as a condition to receiving such prize or awards. Okay, so there are no conditions or responsibilities attached in receiving the award. So you are given ng the award for your previous commitments or past or history or any activity done in the past amo nanging what that is the consideration of the award. So there is no future uh, responsibility that the recipient should undertake. Okay? So the what the law wants for this requisite is that it should not be considered as a compensation for future activity or future labor sa aton nga recipient. Okay? So that's the point why there is number 2 requisite. Okay, letter N, prizes and awards for athletes. Okay, so let's go now to the most popular ng mga awards, which is prizes and awards basing on the currently concluded na Olympics gold medalist Heidelin Diaz. So prizes and awards granted to athletes in local and international sports competition and tournaments, whether the venue is not relevant at all, whether it is held in the Philippines or abroad, and sanctioned by their national sports association. Okay, so in our case, we have the Philippine Sports Commission. So the awards given by the Philippine Sports Commission is not subject to tax. In the case of Miss Heidelin Diaz, those awards given by private companies will be subject to donor's tax. Okay? Donor's tax because what is exempted by the law is those prizes in awards ng granted or sanctioned by the National Sports Commission. So that would be the award given by the Philippine Sports Commission. Okay, so in if I'm not mistaken, that is 10 million. So the other awards received by Ms. Heidelin Diaz will be subject to donor's tax. Okay? Letter O, gross benefits less than 90,000. So gross benefits received by officials and employees. So we are particularly speaking on the compensation income. So income received by an employee. So that is compensation income. So for gross benefits less than 90,000, these are benefits received by an employees of public and private entities such as but not limited to 13th month pay and other benefits. So the total exclusion will not exceed 90,000. So this will be the threshold. Okay? So any amount received by an employee or official of a private or public entities more than 90,000 will be subject to uh, income taxation. So it will form part of the gross income of that particular employee or official. So take note, you have to memorize the amount of 90,000. So that would be the 13th month pay and other benefits. So it should not exceed 90,000. The excess of 90,000 will be subject to income tax and will form part of gross compensation income. Okay, example given of these other benefits, we have your productivity, performance, Christmas bonus, uh, incentives, honoraria, um, 14th month pay, 15th month pay, 16th month pay, profit sharing, share in performance, performance-based bonus. There are lots of bonuses named by different individuals in the public, different entities in public or private. So you have to consider that as other benefits. So you have to add or sum all of those benefits and compare it with the threshold of 90. Anything or any amount in excess of 90 will be subject to income tax. Okay. Next, we have letter P. So your mandatory contribution, so GSIS, SSS, PhilHealth, HDMF, or the Home Development Mutual Fund, or the popular name of that fund is Pag-ibig contributions, and your union dues. In our case, that is our rank and file employees association. So any name of your employee or union groups under the company. So any dues, as long as it is agreed upon with the employer, will be subject or will be deducted from your gross income. Or in that sense, it is included, excluded, I mean, in the computation of our gross income. Okay? So if there are contributions, of course there are, since it is mandatory, it is provided by the law. So this contribution should be deducted from your gross income. Letter Q, gain on sale or exchange of bonds. Gains realized from the sale or exchange or retirement of bonds, debentures, or other certificate of indebtedness. So debt securities ni tawag in accounting with a maturity of more than 5 years. So any gain should be excluded from the computation of our gross income. Since the maturity period is 5 years, so there are lots of interest income earned and subject to final tax on that particular transaction. So that's why it is excluded from the computation of our income taxes. Okay? Letter N. Gains on shares of mutual fund company. So gains realized by the investor upon redemption of shares of stocks of a mutual fund company. So a mutual fund company is a company. Mutual fund company is a pool of assets. Group na siya, guys. It is a pool of assets or an investment company that pools the funds of many individual and institutional investors to form a massive base. Okay? So any investments, primarily bonds such as treasury notes and other securities under a mutual fund should be excluded from your computation of gross income and excluded of sorry, it should be excluded from the computation of gross income, therefore it is not subject to income tax because it is subject to a particular tax on shares of stocks. Okay? Okay, so another group of exclusions. This time it is under the different sections of the NIRC. On our previous slide, it was identified or it can be found on section 32B of the National Internal Revenue Code. Okay, this time, this group of exclusions was mentioned on the other sections of the National Internal Revenue Code. First is interest on long-term deposits. So interest on long-term deposits or investment in banks with maturity of 5 years, take note, maturity of 5 years or more, received by an individual, except non-resident alien not engaged in practice or business in the Philippines. So we have already discussed that one on our discussion on passive income. Okay? So interest by non-resident. Interest received by a non-resident individual on in or a non-resident corporation from deposits with depository banks under the expanded foreign currency deposit system. So actually guys, letter B is provided as a tax exemption, statutory tax exemption, and it can be found in section 6 of the Republic Act number 6426, or it is commonly known as, the name of that law is the Act on Currency, an Act on a Foreign Currency Deposit System in the Philippines. So that is a special law provided. Then under Section 6, it is specifically provided by the law that this interest should be excluded from income taxation. So this is a form of tax exemption provided by the law. Okay, so that is already under the law or under the statutory provisions of RA 6426. So we have to follow what the law says. So if the law says it is exempted or it is excluded from the computation, we have to comply. Number 6, letter C, intercompany dividend. So dividend received by a domestic corporation from a domestic corporation. So that's why intercompany dividend subject to tax under the code. Okay, so obviously this kind of income should be excluded from our computation because it is already subject to final tax. Then letter D, what we call the minimis benefits. So small value benefits, if we're going to translate that, the minimis benefits is means uh, small value benefits. So the minimis benefit received by managerial or supervisory employee or a rank and file employee. Okay? So there is a separate slide for the minimis benefit. So I'm going to discuss that in detail on the next slide na lang. Letter E, income of an employee under employee's trust. So that there is also a separate slide for that. So let's discuss de minimis benefits. So these are facilities and privilege of a relatively small value. Okay? Ordinarily, facilities and privilege such as entertainment for medical services or the so-called courtesy. Okay? Otherwise known as the de minimis benefit, furnished or offered by an employer to his employee. Take note. So the employee-employer relationship should be present before we will consider that particular income as a de minimis benefits. Are not considered, take note, not considered as compensation subject to tax and consequently to withholding taxes if such facilities are offered or furnished by the employer merely as a means of promotion of health, goodwill, contentment, or efficiency of his employees. So, the minimis benefit receive more than the ceiling prescribed, the excess shall only be such is beyond 90,000 ceiling, and it will be considered as other taxable benefits. So guys, there are statutory limits or there are limits in the minimis benefit. If the employer given the de minimis benefit more than the limitation, so the excess will form part of your other taxable benefits, and it will it will be test whether the total other benefits will exceed 90, and if that would be the case, the excess will be subject to tax, not the 90. So there are two screens or uh, there are two nets that the de minimis benefits will going to go through before it will be considered as taxable. First is the limitation, specific limitation for the de minimis benefit. Then if it did not pass the limitation, so you are going to check if it exceeds the ceiling of 90,000 together with other benefits. Okay, so let's discuss the specific de minimis or example of de minimis benefits under Revenue Regulation 11-2018. Okay, so first is your monetized unused vacation leave credits of private employees not exceeding 10 days during the year. So guys, we all know that an employee is under the law ng receives a leave credit. So in every month of service, the employee is entitled for 1 day. Okay? So during the year, if that employee does not use that leave credits, specifically vacation leave credits. So there are companies that allows the credit to be converted into cash. That's why the term is monetized unused vacation leave credits. So it should be converted to cash using the prescribed ratio that depends on the employer. But under the law, if the monetization of unused leave credits is vacation, to be specific, vacation leave credits, because there are sick leave credits man mo. Okay, so this discussion is for vacation leave credits lang. So for 10, if it does not exceed 10 days, so of course it will be considered as de minimis benefit. So the equivalent, like for example, if the employee converted or monetizes unused vacation leave credits for 15 days, so the 5 days or the monetary value equivalent to 5 days of that particular employee will form part of the taxable other benefits. Okay? Taxable other benefits, and if the taxable other benefits will reach the threshold of 90,000, the excess is the amount subject to tax, the excess of 90,000. Okay, that is what we meant or how to apply for the taxable de minimis benefits. Okay, the excess of 10 days, of course the monetary value of the excess of 10 days should be subject or should be included as part of the other taxable benefits, and that will be subject to the 90,000 threshold. Letter B, monetized value of vacation and sick leave credits paid to government officials and employees. Take note that the law does not provide for the number of days. So in short, we can assume that the conversion or the number of days is unlimited, or there is no particular number of days. So whether the government employee or official will monetize his leave or his vacation or leave credits for more than 10 days, so the whole amount is considered de minimis benefits. So in my experience as government employee, so 10 days or less than 50% of your balance of your vacation leave credit will be authorized by you by the office head of the agency, while if you're going to monetize 50% or more of your available vacation leave credits, that amount will be not subject to tax, but the authority or the authority or the uh, approving official will be on the regional office level, sa region na. Sa region ka na mapa-approve sa imo nga monetization. Okay? So, for government employee, that's unlimited. For private employee, it is only limited to 10 days. So, in excess of 10 days, it will be form part of of your other bonuses and will subject to income taxation if it reach 90,000 in summary. Okay? Letter C, medical cash allowance to dependents of employees not exceeding 1,500 per employee per semester. So that is 3,000 for the entire year. Okay? Or 250 per month per employee. Okay? Next, rice subsidy of 2,000 for one sack of 50 kilogram of rice. So rice per month amounting or not more than 2,000. So obviously there are varieties of rice that exceeds the limitation provided by the law. So of course the excess will be subject will be considered as other bonuses, and the same rule, you have to group it together with other benefits, and if it exceeds 90,000, that's the time the excess will be subject to income taxation. Okay? So the limitation or the allowance provided by law is 2,000 per month, or the amount equivalent to a 50 kilogram sack of rice. Okay? So next, uniform and clothing allowance not exceeding 6,000 per annum or per year. Okay? So if your company provides a 10,000 worth of uniform and clothing allowance, so only 4,000 will form part of your other taxable benefits. And if the total taxable benefits exceeds 90,000, the excess of 90,000 will be subject to income tax. Okay. So guys, before the implementation of train law, there are lots of de minimis benefits provided. There are ng book allowance, laundry allowance, there are flowers, loyalty awards, um, recognition awards in kind or in cash. So those are considered de minimis benefit, but under train law, it is only limited to five. There are only five de minimis benefits under RR 11-2018. So of course, those other benefits previously mentioned before the implementation of train law is still considered as de minimis benefit, but the law considered that as an immaterial na. So in short, the law does not provide a specific recognition or limitation for that particular nga mga mentioned nga mga de minimis benefits. Only these five ang gingaan recognition or specific item under RR 11/2018. Okay, so next. Examples of de minimis benefits. Examples of the minimis benefits. Ay, nag-duplicate lang na siya guys. Sorry. Okay. So next, income of an employee's trust. Okay. So the trust form part of a pension, stock bonus, or profit sharing plan of an employer for the benefit of some of or all of his employees. So there are a trust created by the employer for the purpose of profit sharing, stock bonus, or pensions. So maybe the employer is very lenient or very considerate or gina-recognize siya gid ang bulig, or it considers his or her employees an asset. That's why I provide these kinds of benefits for his or her employee. Second, contributions are made to the trust by such employer or employees. So there are companies guys that has trust ng mga benefits. So this is a third party company. Okay? Or both for the purpose of distributing to such employees the earnings and principal of the fund accumulated by the trust in accordance with such plan. So under the trust instrument, it is allowed at any time prior to the satisfaction of all liabilities with respect to the employees under the trust for any part of corpus or principal or income. So guys, the amount given by the employer to the trust for the benefit of his employers are ginaano man siya ginagamit sa isang trust. So there are other incomes generated. So it should form part of the benefits that the employee is going to receive under the trust based on their agreement. Okay? So we just read na lang di guys. So anyway, the income that the employee going to receive under this trust agreement will not subject to income tax. So it will not form part of the gross income and therefore not subject to income tax. Okay, so we are through with our gross income inclusion and exclusion. So next discussion will focus on deductions on gross income. Okay, see you next time. Okay guys, see you next week.
Thank you, sir.
Thank you, sir.
Thank you, sir. Thank you, good sir.
Thank you, sir.
Thank you, sir.